So many results out. Let's start our results service. The company's name is Ascension Properties. It says here, founded in 2006, a black managed and substantially black owned real estate investment trust listed on the JSE. It's come out with its year-end results to the end of June. And this is, I'm reading from the press release here, so please forgive me with my superlatives. It says it's reported an excellent set of results for that year. The fund has shown phenomenal growth in its first year as a JSE listed property fund. And key to this, I think, is its property portfolio has been grown by nearly 2 billion rand. And in the studio in Johannesburg now is Ashraf Mohammed, the CEO of Ascension. So a relatively new company, Ashraf, but growing quite quickly.
Lindsay, you know, the company really focuses on government tenanted buildings. We make them between 65 and 70% of our portfolio. Obviously, that varies as and when we add properties to our portfolio. And we saw this as a gap in the market. It's now been filled by some of our competitors as well. So that space has become far more competitive over the past 12 months. But we still see ourselves having a competitive advantage in this area.
We saw that actually when we spoke to one of your peers a couple of weeks ago on this very show, and we were talking about an acquisition, and it was all to do with government and also therefore to do with being defensive. So you consider 68% government tenancy being a defensive quality, do you? I
think it is a defensive quality. Government tenants got a very bad rap over the past 2 years, especially post the Rushabangu debacle. But in reality, government tenants pay on time and they pay regularly as long as you maintain the relationships with them and you understand the tenants' requirements, which is exactly what we do. So we have a team that focuses just on ensuring that the government tenants are installed properly and that they get exactly what they want.
What sort of long-term leases do you have? Give us some of the durations.
The durations of, well, you can see the lease profile on the results announcement, but just to break it down, we had one big lease that's coming up for renewal, and in fact there we've moved from one parastatal to a government department, and that lease will be for a period of 10 years. So a lot of the lease renewals that we're seeing are between 5 and 10 years. And we're very comfortable with that, especially given that escalations are slightly ahead of inflation.
The other 32%, of course, will become important because, as you mentioned in your introduction, there are other people coming into a space that you seem to be dominating in your own way. So you've got to start to diversify. What about the other 32%, and will it grow? What is it and will it grow?
Well, Lindsay, it's really B and C grade office space in the CBDs of Johannesburg, Cape Town and Pretoria, with a small node in Nelspruit, but the Nelspruit node has 98% occupancy, and those leases have quite a way to run. So when you're looking at the Cape Town node, we found substantial opportunities in that node over the past 6 months, and that's one where, as you would have seen, we've purchased Atterbury House, and we see opportunity in that particular purchase. We also are seeing further opportunities in Johannesburg. The office market has been fairly weak over the past year, and I think rentals have pretty much reached the bottom, and there's only upside from here on over the next 2 to 3 years. So what we see is, as lease renewals come through, we are going to see growth in the minimum rentals that we charge.
A few things have developed since we last spoke, Ashraf. The first thing is REITs, of course. Secondly, interest rates, certainly in the financial markets, implying a rise. Inflation going to 6.3%, CPI that is. Bond markets going up. And also you've raised 1.1 billion in new capital. Let's start with the 1.1 billion. Was it well received? Was it easy to raise?
Look, Lindsay, it was fairly easy to raise. We raised our last tranche 2 weeks ago, and that was placed substantially with one institution. There were 2 other institutions who took a small portion of it. But yes, we are still seeing support coming through from institutional shareholders. With regards to the bond market, you know, that's really speculation about what's going to happen with tapering in the US. And yes, we are subject to volatility in that particular market, and therefore it will knock the property shares. But you know, property has 2 things going for it. One is the income that it produces, and that's been the recent attraction. And then the other is, as the economy improves, so rentals will grow. And if you look at it, we have pretty much, as I said earlier, hit the bottom of office rentals. I can't really speak for retail because our predominant focus is office, but in the retail space we are starting to see traction as well.
Yeah, of course there is a negative correlation between interest rates and bond yields and the property stocks, but on the other hand, with a 68% defensive quality to your portfolio, you're probably less exposed than others.
Absolutely, and what it does give us is, it gives us that cash flow in order to take on further assets going forward.
Ashraf, we're going to have to leave it there, but thanks very much for your time.